Hi everyone, TJ here with the Backpack Trader. Lately, I've received a number of questions from many different Catapult traders and other traders too with my other strategies from all over the world. And it's amazing how these questions come in bunches. And they all pertain to the same major themes, the same themes that we all need to solve in order to succeed as traders. One big question is, how do we know if a trade plan or strategy is going to succeed into the future? Like, it's working now, but how do we know it will continue to work? And that's a super important question. We all want to know the answer to that. The thing is, there's never any guarantees. There's no guarantees with trading. All we can do is stack the odds on our side. Now, that we can do a lot of work towards to prove. You have to have the best tools for sure. You have to be able to answer these questions in a way that you can build a foundation of belief so that you can prove to yourself you've put your best foot forward and have the best chances to succeed, provided that you believe in what you're doing and that you could execute your trades going forward. So I've put together a 3-video series, 3 short videos. This is the first. There will be 2 more. This one is about that big question: how do we know if a trade plan or strategy or both will succeed going forward? And here's the thing. Make sure you're not asking that question from a position of fear. We're all afraid, obviously, of taking a trade and losing and losing and losing and losing and losing. Some trades are going to lose, obviously. It's better, though, that you have a trade plan that wins. You lose some, you win more. So what we're going to look for is robustness. Robustness is where the strategy and trade plan are hard to break. They work under many circumstances. So one of the first things you know about my strategies is that each setup is dynamic, and the strategy tends to dance with the market. It adjusts to market conditions. It's based on momentum and price action. As long as there's price action, we have something to trade that we can be confident in. When there's no price action, that's when the strategy is not going to work. Still, though, some strategies work better than others. Some trade plans are more robust. And so I want to draw your attention to 2 markets. As you know, 2 of my favorite markets. They're complete under the radar markets. Most traders don't focus on these. That's unleaded gas futures and heating oil futures. We're just off the heels of our highly successful Catapult Energy Bootcamp. So I thought it was appropriate to follow up with this. In the next 2 videos, I'm going to cover 2 more very important questions, and we'll look at some other markets as well. All right, so let's get into how we can prove robustness so that we have the confidence and belief in our strategy and trade plan that it will continue to work going forward. At least that it has a high likelihood that it will continue to work going forward, which is all we can hope for as traders. Okay, with this example, we're going to look at unleaded gas futures to start. This is a 24-tick momentum bar, and I chose this chart for a reason. We're going to start with some basic assumptions. I put on a default calculator. Now, sometimes you may try other calculator settings, but we're going to go with default, and we're going to look at all the trades. This is a really great way to see a good starting point in figuring out a trade plan. But what I'm really looking for is robustness, and I'm going to run a couple quick tests with the Trade Assist Automation. This is the advanced Catapult system, and you'll see what it can do and why I'm using it. All right, so the first thing is that you can see some trades are indicated here. We're going to look at 2 positions, a target 3 and a trailer. Obviously, we have more options, but that's a pretty good standard approach. All right, so we're going to look back as far as we can, and I've set it to 120 days back to cover the maximum amount of data that we can pull for this momentum bar. And that's going to give us a lot of trades. Not only that, but I came up with a start time and a stop time. So let's go ahead and take a look at what that is, and then we'll analyze the results. So you can see this is our version 1 control trade plan. It's a scalp and run strategy. It has all the basic inputs in here that we're using, and we're going to look at 8:15 in the morning to 12 noon. So that's 3 hours and 45 minutes worth of trading. And all the trades, we're not going to consider any quitting goals or anything, but we're going to look at all those trades over all those days. And the first thing we're going to see when we look at the performance report is a pretty decent performance report. It's over 2,000 trades. We're getting our 2 steps forward, 1 step back rhythm, which is what we need. right? That's pretty good. 2,000 trades, all the trades, 66, almost 67% win rate, and it's well balanced with longs and shorts and a profit factor of over 1.5. Anything over 1.5 is good, so this qualifies as being good. And we're almost making $40 average net profit per contract per trade. And that's really good over 2,000 trades. That means every time you take a trade, whether you win or lose, it's going to average out to another $38.41 per contract going into your account. Of course, you got to take out slippage and also commission. But those are small costs at $4.20 a tick and over 2,000 trades. Let's look at what the equity curve shows us. Well, it just goes up. There's very little drawdown, and every time it does draw down, it tends to recover in a big way. And it made new equity highs the other day, and it looks like it's pushing up, trying to make new equity highs again. Just this and nothing else shows us robustness. But we can go a lot further, and we can learn a lot more. How can we do that? Well, first of all, with this amazing tool that gives us this performance report already, we can test other start times. We can test the entire 24-hour session. We can see if this will work on other charts or even other markets, and we can do so quickly. And the more we see it work or not, the more we learn what to focus on. So again, remember, I've received a lot of questions from people all over the world. And some people want to trade at night. Some people want to trade in the morning. Some people want to trade whenever they want to trade. You can't force a market, but are there opportunities with this chart? If not, we could find other charts, other trade plans, and use the same techniques. But the point is, right now, this video is about just proving robustness and that this is hard to break, because that's a good starting point to feel pretty darn confident this will continue to work going forward. Can we agree with that? When I talk about robustness, that's what I'm talking about. So let's do a couple quick things. First of all, let's see what happens when we change our start time. As you know, the start time was set at 8:15. Well, what if we change it to 9 o'clock? Well, it still wins a lot. It's fewer trades. That's not bad. Fewer trades, and it's still winning 2/3 of its trades, and it's still well balanced. That's a pretty good sign. What if we change it to something else? In fact, what if we test every single start time by 30-minute increments from midnight until 9 p.m. at night the next day? That's interesting. Let's see what that can do. The reason why I can do this is because I have the Trade Assist Automation. And if we want to get a big answer, a big important answer to an overriding question about robustness, as well as start times, this is another great thing we want to learn, we could do this. Let's put in the start time at 0000. That's midnight. Let's put the stop time in at 2400. That's the next midnight. That's a 24-hour period. All right. So we're going to test start times. We're going to assume we're going to end at midnight, but let's go ahead and use our optimization tool. This is what I mean by having the right tools to discover things. So we click on optimization. We put in 0000, and let's test it to 9 p.m. the next night, which is 2100. And we're going to test it in 30-minute increments. So midnight, 12:30, 1 a.m., 1:30, 2 a.m., 2:30. These are start times to see robustness. If it's not robust, or if it's not as robust, we're going to learn. We're going to learn because maybe some start times actually produce a losing result. That's valuable information. But let's find out. I hit OK. Yes. And we run this test. So I'll go ahead and we'll let this test run, and then we'll see the results. All right, so it took a couple minutes, and then it produced this result. And it's amazing to me because I didn't even know what this would turn out. It's still winning 2/3, but over 4,500 trades, obviously, because it's a longer day from, well, I don't know what it even chose. We'll take a look at that. But you can see that the profit factor is still pretty darn good, and so are the trade results. And so is the equity curve. I mean, that's remarkable. But how do we know what the best start times are, and how do we know if this is truly robust? we can look at the optimization report. Open that up, pull it over and show it to you. So it's very interesting. We're going to have to sort this. Let's sort this on all net profit, like the most profitable setting. And we can see that the most profitable setting begins at 12:30 at night, and the second most profitable is at midnight. And that produces the most trades. In fact, it's 10 fewer trades just by starting 30 minutes earlier. And it produces over $156,000, and that's with an average net profit of $34.63 of pure profit every time you place a trade. It'll be less than that when you subtract out a little slippage and commission. Not much less. There's enough in this to absorb those costs. And the profit factor is 1.51. But let me show you why, apart from the obvious reason, we can see that this is a robust strategy. If you look down this column, which I highlighted for a moment so you can focus on it, look down the all net profit column over here. You will see that it is green all the way down. In other words, no matter what pocket of time, no matter what 30-minute time we start, green. It's winning. You could pretty much close your eyes, throw a dart at the wall, hit a start time, and know that you can be positive and successful with this default setting standard plan. That is robustness. Now, we could do better. Obviously, we can choose the best of the best, and we could sort on profit factor. And here's one that's 2.94. Here's one that's 2.42. Remember, anything over 1.5. All of these are excellent start times. So we've got 2100 right at 9 p.m. So from 9 to midnight, a 3-hour window, it only gave 123 trades, but it won 81% of the time with a 2.94 profit factor. So we would want to watch that going forward. But that's pretty darn good. Given what we've learned about no matter when we start, this plan is a winner. So let's go back to our earlier start time, earlier in the day, 9 a.m., 9:30. Here's 9:30 right here. 2,897 trades. It's profitable 65% of the time. That's at 9:30. Remember, we looked at 9. 9 is even better. It's about the same, I guess. So you get the idea. That's one way to prove robustness. Here's another way. We could change the symbol. I left it at 30 minutes past the hour, giving us over 4,500 trades. Let's look at the chart you guys are probably most familiar with because I've shown it to you many times, a 20-tick momentum bar. Look at that. Even less drawdown, and it even seems more robust. What if we change it to a 26-tick momentum bar? What I love about the Trade Assist Automation is we can discover so much about the best charts to trade. But this is a 26 tick. Looks pretty darn good too. This is robustness. What if we change the symbol? We were looking at the 24 tick on unleaded. Let's start with that. Let's go with the 24 tick and put in heating oil. Wow, look at that. There's a 24 tick heating oil chart. You wouldn't even know I changed the symbol. And we're looking at 3,423 trades. This is how we prove robustness. In the next video, we're going to look at some other things. How do we know the best time to start trading? I kind of gave you a hint, but we're going to examine a few choices. Finally, we'll end the series with how do we know the best goals to set for ourselves each day? How do we know when to stop trading so that we hang on to our money and we don't give it back? Like this, we grow our accounts and achieve our reason for trading. We're going to get into that as well. So stay tuned for the next 2 videos. In the meantime, I want to bring your attention to a high-level boot camp I will be holding this month, coming up very soon. Be on the lookout for the dates. You're going to want to be involved with it. It's our Trade Assist Automation Bootcamp for the Catapult system. We're going to learn how to use the Trade Assist Automation to discover things like this and a whole lot more. See you on the next video.